When a major crisis hits, what do you see? Explosions, politics, all over the news, right? But what if I told you the real story, the one that actually affects your wallet, is happening completely out of sight? That's what we're doing today. We are pulling back the curtain on the financial playbook that gets dusted off every single time there's a global conflict.
So what is this real story? Well, I can tell you where it's not. It's not on your TV screen, not in that endless, chaotic news feed. The moves that really matter, the ones with big money behind them, they're made quietly. They happen far, far away from the public eye, deep inside the hidden gears of the global economy.
And this right here is the key takeaway. The stuff that poses the biggest risk or opportunity to your portfolio, it's not being debated by talking heads on TV. No way. It's all happening in the financial plumbing of the world, and you better believe it's being kept out of sight on purpose.
All right, so here's how we're going to break it all down. First, we'll talk about how the crisis itself is a huge distraction. Then, we're going to expose the hidden money printer. After that, we'll dive into the actual playbook for oil, gold, and defense. And stick around, because at the end, we're going to tie it all together and show you the one real signal you need to be watching.
Think of every major conflict like a magician's trick. It's a shiny object, right? It's big, it's loud, and it's designed to grab all of your attention, to make you feel fear. And when people are scared, they make predictable and usually very costly mistakes. Meanwhile, the real game, the real trick, is being played somewhere else entirely.
And this quote just nails it. It says, "The crisis is going to separate the people who understand the game from the inside and those who don't." See, winning here isn't about being a military strategist or predicting the next headline. It's about knowing how the financial system is programmed to react. Understanding that hidden game, well, that's everything.
Okay, so let's pull back that curtain. While everyone is glued to their screens watching the shiny object, what's happening behind the scenes? Well, central banks are quietly, systematically firing up the money printer.
Now, you've probably heard the old name for this, quantitative easing, or QE. It was already a mouthful, right? Super confusing, and yeah, that was totally by design. But guess what? They've gone and made it sound even more boring and obscure.
Get this. The new name is Reserve Management Purchases. I mean, seriously, it sounds like some boring administrative task an accountant does on a Tuesday afternoon. But don't be fooled. It is the exact same thing as QE. It's just creating money out of thin air to buy up government bonds that, frankly, nobody else wants to touch.
And we're not talking small potatoes here. Look at the sheer scale of this. Under this brand new, incredibly boring name, they've quietly pumped over $225 billion into the system in the last year alone. This isn't some abstract theory, folks. This is happening right now as we speak.
And every single time they do this, it has three unavoidable effects. It's like a law of physics. One, it forces interest rates down, making it super cheap for the government and big companies to borrow even more money. Two, it devalues every single dollar in your savings account. Think about it. The more dollars there are, the less each one is worth. And three, all that new cash has to go somewhere, so it inflates the prices of assets, stocks, real estate, you name it. The bottom line? If you own assets, you win. If you just hold cash or earn a salary, you lose. It's a quiet transfer of wealth. So, with all this new money sloshing around, where does it go? That brings us to the playbook. Okay, so during a crisis, there's a predictable sequence. People tend to panic and rush into two main things. First, there's oil, which, as we'll see, is often a huge trap. And then there's gold, which tends to be a much more reliable hedge. Let's break down the difference.
All right, first up, oil. Whenever a conflict kicks off, especially somewhere like the Middle East, what's the first thing everyone thinks? Buy oil. It's a knee-jerk reaction, and for the average person, it is almost always a terrible mistake.
History gives us a perfect example of this trap. Let's go back to the 1991 Gulf War. When Iraq invaded Kuwait, uncertainty was through the roof, and oil prices shot up from $17 to $46. And that's when all the panic buyers, the retail investors, piled in right at the time. But then what happened? The second the US-led war actually started, the price crashed by $10 in a single day. All that uncertainty just vanished. The people who bought late got absolutely wrecked. Remember this, oil spikes on the fear of war, and it crashes when the war actually begins.
So, if oil is the trap, what's the deal with gold? Well, it behaves in a completely different way. It's not just a hedge against war. You could really call it an everything hedge.
See, unlike oil, which has that quick spike and crash, gold has a tendency to hold on to its gains long after a crisis kicks off. You saw it during the Iranian Revolution in '79, you saw it after 9/11, you saw it with the conflicts in Ukraine. It spikes and then it stays up there. And why is that?
Because it's not just about bombs and tanks, it's a hedge against the response to the crisis, the money printing, the currency devaluation, the loss of faith in governments.
And if you need one final piece of proof, here it is, the ultimate signal. The very same people who are printing all this money, the central banks, what are they doing? They're the biggest buyers of physical gold on the planet. I mean, let that sink in. They are actively hedging against their own policies. They're diversifying out of the paper currency system that they themselves control.
Okay, that brings us to the third piece of this playbook, the defense sector. And this is a totally different animal. We're not talking about short-term price spikes here. This is about a long-term, structural tidal wave of money that is almost impossible to turn off. Just look at these backlogs. These aren't forecasts or wishful thinking. These are locked in, signed on the dotted line contracts. RTX has $251 billion of work already lined up. Lockheed Martin, $194 billion. This is huge, guaranteed government spending that's already baked in for years to come. It doesn't matter who wins the next election.
But here's the secret to their business model, the real cash cow. It's not the one-time sale of a fancy new jet. No, that's just the beginning. It's estimated that around 70% of the total money made on a weapon system comes after the sale. We're talking decades of maintenance, software upgrades, spare parts. It's the ultimate subscription model, a recurring revenue machine that just keeps on printing.
Okay, so let's recap. We've talked about the crisis as a distraction, we've uncovered the hidden money printer, and we've walked through the playbook for oil, gold, and defense. Now, let's tie it all together into a really simple framework that you can use for any crisis that comes your way.
It really just comes down to these 3 steps. Step 1, follow the fresh money. That means you got to ignore the noisy headlines and watch what the central banks are doing. Where's the new money flowing? Step 2, know the asset sequence. Remember, oil is the trap, gold is the hedge, and defense is the long game. And finally, step 3, choose your timing. You have to decide if you want to be early and anticipate the moves, or if you want to be right and wait for confirmation. Both can work, but you have to pick one.
Look, if you only remember one thing from all of this, let it be this. The crisis itself, that's just noise. It's designed to distract you, to make you emotional. The predictable, almost automatic policy response from governments and central banks, that is always a signal.
Because at the end of the day, every single crisis, it doesn't matter what the cause is, it always becomes the justification for the exact same playbook. Print money, bail out the system, and inflate asset prices. The pattern is crystal clear. The response is the signal. So the only question left is, are you listening?